afternoon. Welcome to Business Lunch. I'm Sonia and today with me is Mangalam. Hi Mangalam, afternoon. It's a pretty good day for the bulls, right? I mean, up almost about 70 points. After a bit of a breather that we had, it seems like the market is all set to take that resistance zone of 11,500 out.
Absolutely. And, you know, we start with wordplay and all of that and stuff. The only thing that I can think of, it's the last day of the March series and the bulls have marched ahead, if you must. That would be an understatement to say. 6.5% gain on the Nifty, nearly 700 points this series. And the Nifty banked 3,000 points this series, 12%. And as we speak, 30,200. So looking good. But again, it's the expiry day. So last hour, let's see whether there is volatility or not. But as of now, things looking good.
Absolutely. And, you know, names like IndusInd Bank, Yes Bank, etc. have all given you, what, about 20 to 25% returns in just one series. That's pretty hefty. Today, of course, some of these stocks have come off from the high point. But talking about big movers, HCL Tech is the biggest Nifty gainer this afternoon, reacting to a ratings upgrade from Bank of America Merrill Lynch. Reema's here with the highlights and the rationale behind that upgrade. Reema.
HCL Technology is one of the big movers today on the back of a Bank of America Merrill Lynch upgrade. They've upgraded it to a buy rating from a neutral rating. They've upped the target price to 1,250, and that is predicated on the organic revenue growth of the company rebounding in FY20 after two soft years. There are two key reasons for that. One, an uptick in order wins. Order wins for the company have gone up by nearly 40% on a year-on-year basis. And also FY19 was impacted on account of particular client-specific issues. For instance, there was delayed ramp-up. They had issues with two of their large customers in the financial services, and that is expected to normalize. Also, the company's revenue profile, they get a lot more annuity revenues compared to their peers, and therefore, the revenues are more stable and defensive. Also, in terms of margins, Bank of America Merrill Lynch expects HCL Technology's margins to be stable in FY20 vis-a-vis FY19 because a potential dilution from deal ramp-up on the margins will be offset on account of an accretion from the recently acquired IBM software product. So net-net, a positive outlook coming in by BOA-ML on HCL Technology, and the key to track will be the annual guidance in May of 2019.
All right, those were about the gainers. The stocks which are losing, in fact, the stocks which have underperformed despite the big rally that we've seen are the auto stocks. Escorts is one of them, currently at the low point of the day, after the management at Credit Suisse conference raised concerns over softer demand in the tractor business. Remember, Sonia, you spoke with M&M yesterday and they said that there could be a single-digit growth in the next year. So now the clamor for a slowdown has increased, or the volume of slowdown has increased. More people talking about this?
Yes, and you know, it generally happens when the market leader cuts guidance. It's followed by a lot of the smaller players sort of coming out and echoing the same sentiment. That's what happened with Escorts. The stock, in fact, is at the lowest point. At the Credit Suisse conference yesterday, they spoke about not just tractor demand being soft. They've said FY19 will be a single-digit year. FY20 could also be a single-digit growth year. And FY21 could be a negative year for the industry. But this, I think, was expected because, you know, you've had 3 very good years, and historically, after 3 or 4 good years of tractor growth, you enter into a down cycle. And that's perhaps what is happening right now with the tractor industry. However, what Escorts has done is gained market share compared to peers over the last 6 months. So they've upped their market share by 100 basis points in FY19, and they continue to maintain that medium-term market share target of 15 to 16% by FY22. That's the reason the stock has doubled in the last 6 months. It's gone from 400 to 800. But now, because of those cautious comments, the stock is under pressure.
Absolutely, doubled in the last 8 months. At the same time, if you take a look at just this month itself, Escorts has gained about 21%, outperformed most of the major peers, in fact, all the peers and most of the other stocks as well. But moving from the ground to air, some updates coming in on Jet Airways resolution front. Now we learn from sources that TPG and Etihad Airways, they're showing interest in bidding for the airline. Ritu, more interest coming in?
Well, yes, there's just 2 weeks to go for, all of these players that are interested in acquiring stake in Jet Airways to submit expressions of interest. And we're given to understand that at least 3 players have sent feelers to the lenders and initiated very preliminary talks. The most surprising one of these is actually Etihad Airways. We're given to understand that they have, initiated talks with lenders to see if they can potentially acquire up to 49% stake in the company. Do remember, once lenders take majority control, Etihad's stake will fall to about 12%. So it could look to acquire an additional 37% to take its stake up to 49% by either buying out Goel's stake, which we are given to understand Goel has agreed, Naresh Goel has agreed, that is, that it could, fall to around 10%, and he would not have any objection to that fact. The second player that has expressed an interest is TPG. It is a private equity firm with interest in the aviation space, but we're given to understand if it does put in a bid for Jet Airways, it could be in partnership with either another fund or even a strategic player. And the third one, of course, is NIIF. Do remember, it remained in talks with the lenders as part of the potential resolution plan, and now we're given to understand NIIF could also partner with another strategic player to submit an expression of interest for Jet Airways. These are just the preliminary talks. There's also the obvious name of the Tatas that has been doing the rounds, but as far as we're given to understand, they have not directly approached the lenders on this subject yet.
Okay, thanks a lot, Ritu, for that. Well, moving on, let's take a short break. But before we do that, here are some views, market views coming in from Arvind Sanger of Geosphere Capital Management. He says that the Indian markets stands to gain up to 25% over the next 12 months. But he also at the same time raises concerns over growth in the spaces like NBFCs. Listen in and we'll be back with more.
Recovery from some of the weakness that we've seen in some of the fundamentals that have been, that have been somewhat disappointing in terms of, auto sales, commercial vehicle sales, and other economic measures which have looked weak. The assumption is that that'll recover, and all of those can give us an upside of 20 to 25% in the Indian market if the economic outlook in FY20 delivers, reasonably good growth. We won't look for fantastic growth, but 10 to 15% growth would give us that kind of outcome. Our central case is very modest slowdown, but not a recession in the West, in which case we're more inclined to buy into weakness rather than be selling strength. We're actually finding some of the NBFCs that have been extremely badly hurt to be a little bit more interesting. Those NBFCs had gotten very expensive, and we had traded off all of them last year, but some of them have come back to levels where I think that some of them are now trading at discounts to some of these banks. And yes, their growth will not be quite as heady as before, but that is another area where investors should look at some of the higher quality NBFCs that have gotten sold off.
Welcome back. A sharp move seen on SBI. Most of the gains coming by in just the last few minutes as we speak. So the intraday chart of SBI should come up for you. And there you have it. A big move of close to about 1% coming in just the last 1 or 2 minutes. And apart from that, we had the stock doing fairly well. Heavyweights lending their weight to the Nifty on the upside. We have ITC, which is extending its gains currently at the high point of the day. We have UPL2, a big mover this month, almost 22% this month, and ending this series with the high point, currently at the high point of the day with a gain of about 1.5%. But from the mid-cap end of things, we have financials doing well, and onto a CNBC-TV18 exclusive now. Sources tell CNBC-TV18 that Piramal Enterprises has now is eyeing DHFL assets and may pick up some stake as well. Abhishek?
Well, to begin with, Mangalam, Piramal Enterprise may consider being the strategic investor that DHFL is looking out for. So, Piramal Enterprise could pick up some stake in terms of equity infusion into DHFL, while they could also pick up some assets or the retail portfolio of DHFL. So, the retail loans mainly into affordable housing and the pure vanilla housing finance loans is what they can pick up. The stake buy and asset purchase actually requires a huge sum of money to be picked up. So they may consider, selling off some of their investment in other entities or take up another, player to, come and make a deal. Due diligence for the DHFL deal is already done. And we wrote to Piramal Enterprise, who mentioned to us that they would not like to comment on any kind of market speculation. While we are still awaiting on our query to DHFL, their response has not yet come back. Back to you.
Okay, Abhishek, since you're with us, Shriram Transport is also trading much higher on the back of some positive management commentary.
Well, Sonia, they had been at Credit Suisse conference wherein, they have given a positive outlook on their entire balance sheet. The number one point being that they are not facing any kind of stress in managing their liabilities. Although the fact that cost of funds have gone up by 50 to 80 basis points over the last 6 months. However, they have increased the liquidity or cash in the balance sheet. They have slowed down on growth, given the fact that, growth is hard to come by in in the economic slowdown that we are seeing. But they are confident of maintaining their net interest margin due to increasing the UCV portfolio, which actually has a 4% gap between the yields of UCV financing and new CV financing. They'll also increase the share of securitization and retail liabilities in the overall liability mix. Good demand is being seen for the papers in the overseas bond market as well. The CV demand is expected to pick up in the second half of next fiscal. So there is scope, for them to grow their market share in the unorganized, in the overall UCV financing space. They may raise capital over the next 3 to 5 quarters depending on the kind of growth that they see. And management has also mentioned that, they see merit in terms of liability cost, customer base, cross-selling opportunities by merging both Shriram Transport as well as Shriram City Union Finance. Back to you.
All right, Abhishek, thanks a lot for that. We'll keep an eye out on the financials. But ahead of the elections, consumer companies, stocks like Titan and Bata, they're trading near their record highs. In fact, we spoke with the management of both the companies recently, and they said while demand is slowing down in the industry, they're doing well, and that's primarily on account of the initiatives that they have taken. Titan and Bata, for instance, both of them operate in industries where there is a fair amount of unorganized presence. And as the unorganized sector is not doing too well, both Titan and Bata are making inroads, increasing their market share, and which is reflected both in their stock prices as well. Titan and Bata trading at the record highs or very close to record highs. We'll hear out what the managements have to say.
I think the jewelry industry is not much of an exception to the general rule of consumption being fairly weak. It's a different issue that Titan may be doing well. It's the market share gain we've been talking about for quite some time. We also, of course, had certain events in March which are also helping us gain traction. But I don't think the industry as such has grown much. If any, there could have been declines in many parts of the country. So it's been the high gold prices which have also been quite a deterrent. And the mood generally has not been great.
Demand's been good. We've been growing at double digit and stepped up growth from the earlier years. As far as Bata is concerned, we are seeing very broad spectrum of growth. We are seeing growth coming in through our tier 3, tier 4 towns, including some of the franchise stores we've opened in the recent past. So for me, there's not a very big difference between the growth which I'm seeing in the bigger towns and the tier 3, tier 4 towns.
Okay, that's Titan and Bata. Titan, of course, spoke about the industry slowing down, but Bata is unruffled by the moves that we've seen, at least in the rest of the industry. They say no, they continue to grow at double digits. But as the debate rages on over the Congress's promise of the minimum income guarantee of 72,000 rupees per poor family, Shireen Bhan caught up with the former RBI Governor Raghuram Rajan and began by asking if he had anything to do with advising Congress on the Nyay scheme. Listen in.
I talk to people in the Congress, of course. I've spoken with Mr. Rahul Gandhi, I've spoken with former Prime Minister Manmohan Singh, with Mr. Chidambaram, and I give them my views on many things.
Specifically on this scheme as well?
I have offered my views on this scheme also, yes.
You think that it's an irresponsible proposal, or do you believe that there is room to make it work?
Both the Congress and the BJP have been quite firm in saying that targeted income schemes, targeted income transfers are the way forward. And I think there's reasonable agreement that empowering people with cash transfers can be a very positive step. And to the extent that you can do that within the budgetary space and by eliminating distortionary schemes, I think that it is well worth thinking about. And I think on the BJP side, we have the transfer to farmers. And I think we have the Nyay scheme being proposed on the Congress side. Now, I think the key, of course, is to make it work. Which means that it has to be a way of, when I say empowering, not just empowering them today in choices, but creating a platform for them to become regular contributing members of the workforce. And how do you do that, whether it's agriculture or whether it's these direct transfers to the very poor? How do you identify the poor? My sense is what the Congress is saying is that this will all be laid out. We will figure out how to do it. And, they've proposed a committee, pilot projects, and a phased-out process.
Well, for now, the market is doing fine. In fact, it's up almost about 0.5%. The mid-caps as well holding up in the green. But let's shift focus to another CNBC-TV18 exclusive. Sources tell us that the Income Tax Department is set to introduce new ITR forms before the 10th of April. Timsi Jaipuria joins us on the phone line with those exclusive details. Oh, in fact, she's live with us. Hi, Timsi. Tell us, what are you picking up?
Well, that's right. Come April, government will get engaged in asking over 6 crore taxpayers to file their income tax returns for income earned in financial year 18-19. Well, sources indicate that the Income Tax Department is currently designing the new forms, which are likely to be introduced around April 10. Here are some of the new changes that will feature for the first time in the ITR forms. New additions include individuals will have to list capital gains made from listed entities. Government will charge 10% on gains of more than 1 lakh rupees earned. This is for both corporates and individuals. New window will also feature in for individuals where standard deduction up to 40,000 to be made available for the first time. Similarly, a new window on tax exemption for interest income from savings bank account of up to 50,000 rupees for senior citizen, and for non-senior citizens the similar exemption will be available up to 10,000 rupees on the interest income earned from saving bank's account. A new window of 5% relaxation on capital gains if property is sold below the stamp duty. Let me remind our viewers that the return filing process usually starts in April and ends by 31st July. So let's see how are the new forms looking, and yes, we'll keep you posted on it.
All right, MC, thanks a lot for that. We'll go into another exclusive. Then, as reported by CNBC-TV18 last month, the IRDA, the insurance regulator that is likely to finalize product regulation norms. CNBC-TV18 now learns that the IRDA board meet today will take by product regulation and may also give the first level nod to Indiabulls for its general insurance business. Yash, what are these norms likely to be?
What we are given to understand is that insurance companies could be allowed to charge extra or additional premium to their policy holders for any rider or top-up which they want to buy over and above their existing ULIP or unit-linked policies. Do remember, right now, ULIP units or unit-linked units are deducted against any top-up or rider which is bought by a policy holder. Over and above is unit-linked policy. So that is one important regulation. Apart from that, we are also given to understand that insurance companies may be allowed to do away with the provision of minimum capital guarantee, which they of course commit to the policy holders in certain business segments, including the pension segment. Essentially, this will give them more freedom, more independence to play with their investment pattern, to invest more in equity, to invest less in debt, and so on and so forth, depending on the situation, and not just concentrate on focus on investing in debt instruments in lieu of fixed returns which they have to pay to their policy holders. Apart from that, we are also given to understand that insurance companies may allow their policy holders a partial withdrawal of up to 25% when it comes to their pension policies. This will be very important because at this point of time, no partial withdrawal is allowed by policy holders as far as these pension policies are concerned. What we're given to understand is that IRDA may allow insurance companies to have this partial withdrawal of up to 25% in situations like education, marriage, home rent, so on and so forth. This is as far as the product regulations and the overhaul there is concerned. But of course, a very important business approval also expected in today's board meeting, and that would be for Indiabulls Integrated Services general insurance business. We had reported that the company had filed for its papers in January, and today we are given to understand that it might be given its first level approval or R1 for the general insurance business. As far as the entity itself is concerned, it's a wholly owned subsidiary of Indiabulls Integrated Services, which will look to start its general insurance operations with a minimum capital of 100 crore rupees. But of course, the parent, which is Indiabulls Integrated Services, will also have to keep a reserve capital of 500 crore rupees for the purpose of further funding as far as the general insurance business is concerned.
All right, Yash, thanks a lot for that. As we count down to the mega event of the general elections, Network 18 presents a campaign to urge you to exercise your right to vote and choose the nation of your dreams. Take a look.
Democracy, a gift from our ancestors, bestowed upon us. It's time we honored it. As India gears up for the 17th Lok Sabha elections, it's time we joined the march of democracy. It's time we came together as one nation. It's time we showed the world the strength of the largest democracy, our democracy. The ballot is stronger than the bullet. The indelible ink is mightier than the sword. Network 18 proudly presents Button Dabao, Desh Banao, a campaign to empower you to make the nation of your dreams, to exercise your right at the press of a single button. It's time to exercise your voting right, for your heart beats for democracy. India needs you to come out and cast your vote. Ensure your name is registered with your electoral office or register afresh now. Button Dabao, Desh Banao, a Network 18 initiative.
All right, Button Dabao, Desh Banao is our latest initiative. You go ahead and exercise your franchise to vote. With that, we come to end of this edition of Business Lunch. You stay tuned to CNBC-TV18. Mid-Cap Radar comes up next.